Hey guys, what's up? Stock Retail coming back to you. As you can see, what I want to talk about today is I really am starting to get more and more confident that we are going to set some new records for revenue at AMC. And so I want to talk about that and actually back that up a little bit today with some DD. I had mentioned that in a video before the Q1 earnings call, showed you guys a couple of views of why I believe that. Today I'm going to go a little deeper even still. And then you can see kind of the subtitle here, just win stock price, bro. So I get asked a lot on X and some of the comments here on YouTube as well. A little bit telling, especially when, like, let's say a video gets some positive response from you guys, then I start to see a lot of unknown accounts coming in and just really putting your focus on how, for a few days, we've obviously seen recently 0% price movement on the stock, which is obviously really weird. Um, and just being frozen in kind of the 270 zone for a long time. So people try to put your focus on that, but man, I have been just so excited and so happy about how things have been going. And watching shorts try to hold that back, that's a ticking time bomb. And so let's talk through the actual business. Let's look at what is happening, and I will address a little bit about stock valuation. So that's something I've done from time to time. Got a few requests to look at that, so I am going to look at that again today. So if we kind of ground ourselves in what is the actual business, how does the industry tend to value stocks in this business, and then what does that mean kind of for us? So let's go ahead and look through. First, we want to just remind ourselves, we just had Thunderbolts coming out, but even just this month, we still have Final Destination pretty much comes out tonight. So any of you seeing that on kind of preview night, Thursday night, enjoy that. So we've got Final Destination. A lot of the industry forecasts are above what I had for the opening weekend. So that may be continued upside to my forecast. That's awesome. Lilo and Stitch then and Mission Impossible. So Mission Stitch Possible or whatever you want to call that one. Mission Stitch, I don't know. That coming out from Memorial Weekend, by all accounts, those look huge. I actually still think people may be underestimating what Stitch is going to do. Mission Impossible, a lot of buzz around that one. So let's just see how that goes. Karate Kid. So that's just for the month of May, and I'm not even listing really all the movies, right? You guys know there's a bunch of others coming out, including some classics that we're going to start seeing, some anniversaries of some movies. And then in June, we still have Ballerina, How to Train Your Dragon, Elio, Megan, 28 Years Later, and F1 all coming out. So just reminding us that, for the rest of the quarter, we still have a ton of movies. It's like we took a little bit of a breath last weekend with not a lot of new movies. And the rest of this quarter, every weekend, boom, boom, boom. Maybe you heard on the earnings call where Adam had said, I think he said 11 out of 12 weekends we had big movies coming out. So that actually extends us out beyond this quarter. In fact, in a little while here, I'm going to show you July's view. We just keep rolling. I focused a lot on Q2. I've been telling you about Q2 just because it's so huge and it's so exciting, the profits we're about to see. But we don't stop at Q2. The rest of the year is going to be big. And I'm going to talk about that today too. So where we're kind of tracking so far, now think through, we're about halfway through the quarter. So we've got a lot of actual results already. We know how Minecraft and Sinners and Thunderbolts and a few others have done, right? We've got the real results. Accountant and Amateur and a few other movies. And so we can track pretty well how all those either have finished or how they're going to finish. We've got enough results on those. And then, I've got obviously trend sort of forecasting and then buzz forecasting on a lot of the other movies. I've told you guys before, I forecast movie by movie. For every single movie coming out in the quarter, I forecast. And so as long as I'm not too far off on any given movie, or a lot of times what happens is as long as the upside on one kind of cancels out the downside on another. And so far, I'll tell you what, this quarter, in particular from Sinners and Minecraft, obviously, and even a little bit from Thunderbolts, we've mostly had upside to my forecast. I came into the quarter with around like a $2.6 billion forecast. And here you can see my current tracking. Now, this is just current tracking. I'm not saying this is a nailed down number, but if you just kind of give all the puts and takes so far, and I try to keep tweaking, as I see news, like as Lilo and Stitch had really great buzz, maybe I tweak that upwards a little bit. Or if there's some other movie that maybe wasn't received real well, then I might bring that down a little. And so a lot of movies are really just tracking very, very well. I told you a minute ago that Bloodlines, Final Destination Bloodlines, is maybe tracking above my forecast. So that's looking really great. So as we're tracking live, let's call it live really, I've got us tracking above 2.9 on the quarter. That's why I've also said in some posts on X that who knows, maybe we start sniffing 3 billion. We'd have to have a lot go right still because I've put a lot of pressure on the forecast on Stitch and How to Train Your Dragon in particular. I think those movies are going to do very, very well. But if we get upside to any more movies, Elio would be one here that I'm showing you where I haven't put a huge forecast behind that because it's a new, let's call it almost a new franchise or a new brand name from Pixar. But so far, it does look like it might be really cute. And if the audience responds to that one, that'd be a good example of where we might beat my number that I've got in there. So somewhere, let's say we're tracking from like 285 to like 3 billion, right? So we're having the best quarter we've had of the entire what I call the ape or the retail era. Everything since the January 2021 event till now. That's our era, I kind of call that. So we're having by far the biggest box office quarter. And then you can see, I believe, and I'm going to walk you through in a minute how I get to these numbers. I believe that brings us to an earnings number of anywhere from 85 to 120 million dollars at the bottom line. Now remember back on the Barbenheimer quarter, AMC had about 12 million dollars at the bottom line that quarter. So I'm telling you, we're going to maybe 10x our best quarter ever. Now that's a work in progress forecast. My real kind of dialed in forecast is probably 108 million right now. If you haven't seen WIP, work in progress or work in process, just means, hey, still tinkering with this. That's not a finished product. So don't necessarily write that down as my end all be all forecast for the quarter. I'll do that when the box office closes and give you my Q2 forecast. But if what I'm really saying is if we track to this 295 that I've got right now, then I think we might have $108 million bottom line earnings. Cash flow is probably even bigger than that. And revenues setting all-time records, 1.6 billion, give or take. That's that plus or minus there. Let me walk you through some assumptions on how we get there. Let's spreadsheet it up for a minute. A lot of detail on here, so just work with me. I'm going to kind of walk this through, and you'll just see I just made a whole bunch of kind of, I'll call it like almost napkin notes for you. In fact, why don't I make this smaller? Forgive me, I probably should have done this before, but it's just as we're talking, I'm kind of realizing there's maybe a lot you guys won't see. So if I just, whoa. This is why you don't do this stuff live. Okay. So if I meant to click this plus button. There we go. All right, so let's just walk this through. What I've done is I've compared to Q4 because, we just finished Q1 and I've got the actuals on that and can talk through that a little bit too in a minute here. But I wanted to compare it to a recent quarter that was slightly bigger at the box office. So you can see we're still crushing that quarter. Like we're $600 million at the box office bigger. That's a huge, huge difference. And AMC starts to make a lot of profits as the box office gets bigger. And we're going to talk through why that is a little bit. So, what I want to just show you is to give you sort of a reality check or a sanity check so that it's not just trust me, bro, so that I'm not just showing you this slide saying, hey, we're going to make 108 million. And you're like, okay, cool. I guess he's been right before. I'll believe him now. What I want to just show you is compared to a recent quarter, how did I get here? And then you can kind of in your head, sort of go plus or minus from there. That's the way I've described that a lot. You guys have heard me say many times, these are forecasts. And if you have a forecast, it's pretty much wrong. So nobody can hold me to these numbers, but I'm telling you why I'm showing you these numbers. And then you can challenge the assumptions in your own head, all right? So first off, I want to tell you about attendance, right? Because everything feeds off attendance. You can see we have admissions per attendee, we have food and beverage per attendee. And by the way, as I go through this is going to get in the weeds, numbers video, DD video. Hang with me because I'm going to pull back up to the high level by the end of this video. I'm going to talk through the entire rest of the year, why we maybe even need to entertain the thought, are we going to actually have full year profits? How does it go forward? What's that going to mean to the value of the stock? I'm going to hit all of that, even some actual price valuation on the stock. Setting aside squeeze, right? So we're going to make sure we talk about the squeeze too, because I never want to be someone who's, accidentally, I'm not trying to price anchor you or anything like that some of the shills would do. I'm just showing you math-based valuation. Then we can think about squeeze on top of that, right? So I'm going to hit all of that in this video, probably a longer video. hang with me, or put me on fast forward on your playback speed or whatever. But so let me just show you some comparisons. So what I'm saying is, with this almost $3 billion box office, we would hit basically 76 million people. You can see this number here, the 76,484. This is in thousands, pretty much. So you could say basically 76 million people would come to AMC globally. That's including all of our Europe doors and all of that. And that is a gain of 14 million over last Q4. And now, so let's just talk that through a little bit, because you can see the box office, right? I'm just moving around a lot. So the box office is a gain of 26% over that quarter. And then you might say, well, how come you didn't grow our attendance by 26%? Especially since if you got sharp eyes, you'll see I've got a lower per ticket price. Kind of means we should probably have like higher attendance to get to these numbers. But let me just talk that through. So here's just some notes. You can kind of see what I've done here. I have this at, I think I did a 3/4 average. We can even just go look. Let me just show you guys. We're going to show you this. Okay, so for Q2, you can see if I click in here, I took the last 3/4 of our attendance divided by the last 3/4 of the box office times what I've got for our forecast this box office. But then I want you to notice one little thing here. I'm actually even reducing it. So what I'm saying is, give me some, because so Q3 of last year was the big dip on the box office. I've covered that many times. That's the one quarter where I got our earnings wrong. I don't know, 12 out of 13 quarters or something like that. I have really nailed the earnings forecast. Like we're talking like high 90% of accuracy. That quarter I did not nail because we had a big dip in the attendance based on the percentage of the box office. So what I'm doing here is I'm taking our last 3/4 average, dividing by the last 3/4 of box office. That could give you basically, all right, for every dollar at the box office, how many people attend AMC. But then I'm actually even reducing it. I'm saying we're going to actually be something worse than our last 3/4. That's this divided by basically 2%, 1.019. Kind of wildly made up that number, guys. So what I'm going to show you here, let me go back, is what if we actually hit the last 3/4 average? If we just straight up flat averaged the attendance rate based on the box office of the last 3/4, you can see I'm telling you we would add 11 million more people. Okay, so if we just we would add 1.5 million people. What I said is if you looked at just Q1, if you looked at the attendance rate of Q1 that we just finished, just had that great earnings call on, if we had the attendance rate at the box office that we had in Q1, then we'd add 11 million people. So I'm just saying we're somewhere in between. I'm taking basically a little bit worse than our 3/4 average. You'd like to think there's some kind of trend information in there. So that's the forecast I'm giving you here. That's my 76 million. Something worse than the last 3/4 kind of smushed together. If you said, well, instead of going worse, why don't you just give me the last 3/4? I'd have to increase this number by 1.5 million people. Or if you said, you don't even look at the last 3/4, go with what's the most recent quarter, that Q1 we just had. Then I'd have to increase this by 11 million people. I think we're probably going to be somewhere around what I'm telling you. That's why I've done it this way. Let's end up seeing, so just in your mind as I go through all of the numbers here and I get to this $100 million plus earnings number, keep in mind that I'm actually giving you, an attendance rate that feeds everything that is below a combined 3/4 average, okay? Now, we don't know, like we haven't been at this level of box office. What happens when the box office is at this level? Adam kind of cautioned us, you may be starting to bring in, if you're bringing in a bigger audience, that's not this. So like, think of like concentric circles, okay? In the middle are like the Stubbs A-list and Stubbs Premier members. They're coming to AMC all the time. And many of you are at those levels, coming to AMC all the time and spending a lot of money at AMC and very, very loyal and coming to a lot of movies, right? So that core consumer is there on a small box office quarter and a big box office quarter, kind of no change. Then you go out, all right, a little bit bigger box office, Barbenheimer happened, Minecraft and Sinners happened. These it's an Avatar quarter, a bigger group now is coming who likes movies but maybe doesn't come to as many movies, but there's this big thing happening. Do they spend as much money at AMC? Do they even go to AMC? Last Q3 we had some movies that were more heavily attended at Cinemark and Regal than they were at AMC because they were suburban crowds that were going. So there's all these things that can happen. Then you go farther out. Like we've started to expand. You guys have seen the great news on the Wednesday 50% offerings. It's half off on Wednesdays at AMC if you're a Stubs member. And there are even free Stubs membership levels. If you had seen me posting on X, you would see that I'm thrilled about that because AMC is now showing up on sites like Hip to Save and some others that I think we're going to get a certain consumer who maybe wouldn't otherwise have gone to as many movies. And they're like, all right, let's say for the summer, some mom is bringing her kids, to a Wednesday showing because she can get half off for her family. And now she's becoming a Stubs member and she's getting more loyal to AMC. I think we're going to see a lot of really good things from that. But so here's just the point on attendance. All I'm just really saying is get bullish because I'm using a number that's below our 3/4 average. Even just the 3/4 average, I'd have to add 1.5 million people. And now look what happens. We've got, I'm saying 11.44 a ticket, and I'm saying 7.36 a person for food and beverage. We'll talk through that in a minute, and about $2.20 on our other revenue line, kind of the merch and all that stuff. So it's $21 a person that adds up to. I did not do that on purpose. Kind of cool for those of you who like Bitcoin to have that 21 show up. I swear to you, I did not do that on purpose. So I was like, oh, that's kind of cool. But anyway, so it's $21 a person. If I add 1.5 million people, you can see I got to add $30 million to our revenue just if we're at the last 3/4 average. And if we hit, again, that Q1 attendance average, maybe I'm adding $230 million of revenue. I just let me, not overhype you. I do not think at all that we're going to hit that level of attendance on this big of a box office. I think it's going to be spread out. I think you got this whole suburban urban mix. You've got whether movies are more heavily attended in Latin America versus Europe. I've told you before, Deadpool did so well in Latin America. Well, that benefited Cinemark a little more. If we have movies that do well in Europe, AMC has Odeon and UCI and some Nordic brands. AMC does pretty well. So we're going to have to see how this quarter shakes out. And so you can see there's a lot of even guesswork in getting to an attendance number for AMC. But the point is, I believe there's probably upside to my forecast. I mean, if you just pull way up and you say, all right, he grew our attendance slower than the box office grew, maybe there's room for us to at least keep in line with that. Okay? Enough about attendance, but now as I go through all the numbers, that's going to feed everything. So a couple more like housekeeping. Let's make sure we understand where I'm getting my numbers from. I have to use some assumptions around what are we growing ticket prices at. And you'll see here, compared to just this last Q4, I have us, guys, I think at one point here as I've been talking, I mixed a couple quarters. Q3 last year was our big attendance dip, not Q4, okay? But I'm comparing to Q4 because we had a little bit better attendance. I think at one point I talked about Q3 here. Sorry about that. That's what you get for talking through a lot of numbers. But I will just show you real quick. So if we were to go back, I have shown you this before. Q3 is where I was talking. There was a bigger box office, but not that big of attendance, right? So if I reference that, that's what we're talking about here. And that was the quarter that I was a little bit off. So let's look at Q4 though, because we had Mufasa, we had Sonic, we had Wicked. It was a decent sized quarter, and AMC's attendance was a little bit better. And then you can see our ticket rate, so per person tickets was $11.56. Now I've kind of looked back through a bunch of quarters, and sometimes for sort of the holiday period, it seems like we have maybe a decent price per person. And so a couple things. You can see I'm actually planning on a lower per person average for this quarter than what we had in Q4. Probably just a different mix of the movies. As we now maybe have more people trying to hit Discount Tuesdays, maybe people are, going to start hitting this 50% off Wednesdays. And so you can see I'm down 1% over a few quarters ago. And generally AMC has kind of been up and to the right on ticket prices, especially since, remember, we've been opening up premium screens, adding premium seating. There's a chance that, you could also say there's upside to this. If we have people paying more per ticket, everything kind of comes down to how many people come and how much do they pay when they come, right? And then you can kind of say duh to that. The secret sauce is in me getting to some real accurate numbers on that and on our expense items, which we're going to keep talking through. So just a few more data points on that ticket price per person. I've got us flat to last Q3. I've got us down from Q4, as you can see, and I've got us above what we just finished at Q1. So, I'm kind of there again, looking a little bit at recent trends, an overall kind of let's call it a moving average. I didn't actually set this at a moving average. There's some, personal guesswork in this too, but so that I've got us flat basically to last year, down a little bit from just, I don't know, 6 months ago and just above 3 months ago. So somewhere in the zone. I guess we could just say we know it's going to be somewhere close to this. But with Sinners, how that has crushed it at IMAX, some things like that would tell me, hey, maybe we're going to be above this number. So let's wait and see on that, okay? But that maybe you can probably plan some upside. Let's hope. Same thing with food and beverage. So you can see Q4 has tended to be a little lower. I looked at the last few Q4s. Seems to be, it's funny, like the ticket price seems to be higher and the food and beverage price seems to be lower, just compared to other quarters in general. But you can also see I'm flat to last year Q2. So let's go back to those numbers again. I'll show you what I mean. If we go to Q2 2024, you can see we were at 734 a person. And then Q3, we were very high, 753 a person. Most recently in Q1, we were pretty low, so 676 a person. So there, I don't know, you could argue me into believing that there's downside to my forecast. You could argue me into believing there's upside to my forecast. I don't know where we're going to be. Adam had said April was really great, right? So we've closed April from Q1. And on the earnings call, if you heard him talk about that, he kind of alluded to that was a pretty good month, even at the food and beverage sales. So let's wait and see. But I guess what I'm saying is, there's some risk to this forecast on all these numbers, right? You could say there's upside maybe to the attendance. Could probably convince me there's downside. I'm going to hope that there's actually probably upside on the ticket price per person. And you can almost argue me both ways on there either being upside or downside to the food and beverage spending. So now you know how to get to all of that. I'm just trying to basically build you up into some understanding behind all these numbers, because when we pull back up and we talk about is AMC going to make $100 million at the bottom line, I want you to be sort of shill proof and FUD proof so that you can understand how we even get to those numbers. And even the fact that I'm sitting here talking to you about maybe making $100 million at the bottom line this quarter, that you understand what a huge, huge deal that is based on the stock price right now and how those are wildly disconnected. Okay, so let's keep going. So then that attendance and that price per person feeds admissions. And that attendance and that price per person on food and beverage feeds your concessions, right? So I don't have any notes on that. I've already explained how we get to this. And really, again, high level, you could say, all right, so we've got a 26% growth at the box office, but only a 21% growth in our total admissions. Maybe we could beat that. I don't know. We're going to have to see. You can kind of think about how you want to play with those numbers. And all you got to do is, I've shown you, just based on how many people you think above or below me, just multiply it by something in the price and you can get to some number above or below me. That might be an example of easily how you could do this for yourself too. And then same, so food and beverage, you can see I've pretty much got that growing at the same rate. If we're just comparing, I'm using this Q4, this most recent, a decent sized quarter with a more, I think, normal attendance rate for AMC. So I want to just give you, all right, I've talked to you on this channel before about comps. What are we comparing to? So if you compare to Q4 and you just think, what do I think is better, worse, the same? I've got food and beverage revenues growing basically the same pace as the box office. So that seems pretty reasonable, right? And all of these seem, admissions, we're underperforming. At concessions, we're about the same. Merch, we have definitely been growing merch way faster than the box office. And we've been growing, I'm putting popcorn here. It's still not entirely clear to me how we're reporting, popcorn revenues. I think that we're probably putting those in other. I don't think we're putting those in food and beverage. But I'll leave it to the team to clarify that someday when it's big enough. So I think we've got popcorn here. And here's the point. We know we've expanded popcorn significantly, even since Q4. We had been told in Q1, we saw that growing, expanding the amount of doors we were in, and it did show up in the results. We've had expanding merch, and then the strong movie lineup is bringing more people who want to, so say they want to buy the Thunderbolts merch, or coming up, they want to buy the Lilo and Stitch merch or the How to Train Your Dragon, et cetera, et cetera. You guys get it. So, interestingly, if you look at the last two, look at my notes here. If you look at the last two combined quarters, Q4 and Q1, that we have actuals on, you could kind of go and just say, all right, what has been, based on the box office, how much have we had in this other revenue line? And I'm planning kind of lower, like about 7% lower than just these last two quarters. Now, part of that is because, this quarter's so big at the box office, and you're going to start to have some funny, I don't know, funny relationships in the other revenue with the box office. Because if that is also our popcorn distribution at grocery stores, I don't expect popcorn to really track with the box office. It's like separate from that. People don't necessarily go see Final Destination Bloodlines and think, hey, I'm going to drive over to Walmart and buy some AMC popcorn. You and I do, but your average moviegoer doesn't do that. So it's not like walking in the doors of an AMC is necessarily affecting that revenue line, I don't think. So we're going to have to start to think through, as popcorn becomes bigger and bigger, how we forecast that piece of it. But merch, certainly, you come to an AMC, and Adam and the team have told us they're kind of, buying deeper into their inventory to be able to sell more. And so that has some relationship with the box office for sure. And so the point is, I've got this, if you look at our last 2 quarter average and the way that this has been growing, maybe there's upside here. I just didn't feel comfortable because you can see I'm already showing $40 million of growth over Q4, and a little bit outpacing the box office growth. So we're going to have to see how is merch and how is grocery popcorn really delivering. But overall, you can see our revenue number, and that is that all-time high. So let me just show you. I think it was Q2 of 2019. So I'm going to zoom way over here. You can see how many numbers I've tracked for us over the years. Here's Q2. That was a $3.3 billion box office, and AMC's revenue that quarter was 1.506. So if I just I've got us back through 2018. That's as far back as I've gone, where I've just pulled in all these numbers over the years. You could do this for yourself. You don't have to trust me on all these numbers. You go back and you go, all right, let's look at AMC's filings. And so that's what's really helpful. And that's why the shills kind of can't do much to me, because I'm talking about real numbers and real trends, and then bringing some of my background to that. All right, so we had this $1.5 billion number. And what I'm telling you is in Q2 of this year, based on this $2.9 billion box office, we'll beat that. And by the way, that then starts to tell you a little bit, I have told you, it's one of my first videos I ever made, like clear back in 2022, was all about how AMC didn't need the box office to get to pre-pandemic levels to be a profitable company, and maybe to be even more profitable than pre-pandemic, which is a mark of how well your management team has led this company. Adam and Sean have been saying that on multiple calls as well. We don't need the box office to be at pre-pandemic levels to hit pre-pandemic earnings, and maybe even better. And so here, I just showed you that quarter in 2019 was 3.2 billion. Based on a $2.95 billion box office, I'm forecasting crushing that number. And let's now talk through expenses. Sorry guys, I know this has been long, but I just really want to, give, some of you really do like the deep dive into the numbers. So I don't know, maybe without further apology, I'm just going to keep going so you can see how did I get to my bottom line. All right, so let's talk about film costs. AMC pays back a piece of all of these ticket sales. Every time we get that 11 something per person, the studios take a cut. And so what I'm showing you is in Q4, that cut was 48%. Now, there are other quarters. Why don't I even just show you a host of quarters here? Let's go back here again. Where do we have that? Okay. So let's go here to some actuals. So we'll go through my forecast, which I'm showing you. I'm forecasting at 51%, just over 51%, that we're going to pay a little more than half of all of our ticket sales back to the studios this quarter. But you can see in Q1 it was way lower. It was only 43%. Now a lot of that is because a lot of Q1 was the carryover of Mufasa and Sonic and some others, and so it just wasn't that great of a quarter, and so we didn't have as many blockbusters. Blockbusters tend to be higher. So like look at last year Q3, things like Deadpool. That is a better comp where we were actually above even what I'm saying. So I'll show you real quick. If I just change this 51 point, let's say even higher than last year, 51.4. We're still, do you see this number, this 105.61? Keep your eye on this number because now I'm going to undo. We just lost $3 million that we had to pay back to the studios, but we're still over $100 million at the box office, even if I say we're having to pay more than last year. And take a look. You don't have very many quarters recently where we've been above 50. Now, you got the strike in 2024, so that's probably part of that. But even looks like Q2, so Barbenheimer quarter, we were at 51.5%. But other than that, look at this, 48, 46. There's about 50, 43, 45, 48. So, 48, 43. So I guess I'm just saying I don't think it's too unreasonable for me to guess at around 51%. That we got a lot more blockbusters this quarter, but even if I go up, let's say I just said, geez, we're going to have like our all-time high a percent we got to pay back to the studios. We're still hitting $100 million of bottom line earnings. So even if you want to make it real expensive and we're giving the studios back a lot, we're still going to have very, very high earnings, right? So I just wanted you to see that. And you can just see kind of our last three quarters averaged at about 48%, let's call it. And I'm planning on giving 51% back. So I'd like to think I'm good here. And that's giving back $100 million from AMC to the studios. All right, so food and beverage costs, that's another one where, hey, it's great if we grow our food and beverage revenue, but we know there's inflation, right? So AMC has to deal with inflation on its cost side. And you can see that I've increased that actually. So Q4 that we just recently finished was 18.6%. So our food and beverage cost was at 18.6, and that's been pretty consistent as well. And I'm planning on 19% for this quarter. You can see Q3 and Q4 were lower than what I've got. Q1 was a little higher, but again, that's such a small box office. It might have to do with how many people were coming in. Maybe we had even some spoilage, like too much inventory or something because not enough people came. So I think we'll probably be back more aligned with our average. And you can see I'm even planning on really a higher cost than Q3 and Q4. And we've been pretty consistently under that too. If I was to go over and scroll through that and blur your eyes with all those numbers too, I think this is a pretty reasonable forecast. So what I'm really just telling you is good to go there. Probably I'm not overhyping you on some of our profits, from keeping a certain cut of the film, ticket sales, keeping a certain cut of the food and beverage sales, and then operating expense. That's the big one, and that one is a little harder. I have some kind of, I don't know, more complicated math on how I get to that, and so you can see though I've got us 40 million, almost $42 million above that Q4. Now, granted, I've warned you guys, when the box office gets bigger, you've got, let's say, more showings, which means more shifts. You've got to pay your workers. You've got, maybe the bar is open longer. You're going to pay your bartender. Someone's got to, run the vacuum more. The lights are on more, so your electric bill goes up. Maybe air conditioning bill. If it's getting hot enough, we're going to get into June here, or the heating bill even still in April. There's more flushes of the toilet, so your water bill goes up. So the point is, operating expenses go up as our industry goes up. But the really great news, and Adam has told you about, he's called it operating leverage. I've called it something called gross to net in the past. The good news is our operating expenses will not go up as fast as the box office goes up. So as the box office is getting bigger, you're going to see our earnings start to do kind of a hockey stick type of a thing, like going up and to the right very steeply. And so what I'm hopeful that you can even see, I put the word hopefully over here. I'm hopeful that I've been somewhat conservative. Maybe the team could even beat this number, which would mean we'd keep even more in our bottom line earnings. But there's been a few times where I have underestimated this number as well because, the team has to run the business. And as we've expanded the popcorn business, we even hired a VP for that area. You just have certain, you might call it SG&A, if you're a finance person, that we've grown in some areas. And I don't know if the team is still pursuing distribution. We haven't heard about that in a little while. That's going to take an employee base to run that business, and that's going to take marketing dollars and legal dollars and all kinds of things. So this is a wild card here. I would just caution you that you could see us have even more operating expenses than I've planned. I'm just hopeful the team can continue to squeeze that number. So just you can kind of see I've grown that, but with some economies of scale. You're going, and it's just that operating leverage you're going to start seeing. All right, rent. All I did was just basically keep it flat to what we just reported out of Q1. You can see it's above last year, but remember, like I've told you, we opened a Chicago property. I don't know if we've opened any other properties. Perhaps it was time for some leases to come up for renegotiation. We renewed some leases and maybe some rents went up. So I've just kept that flat to Q1, and a little worse than last year. But since we just reported Q1 and that was our rent most recently, that feels pretty reasonable to keep it at that number, and we'll find out where we're at. I don't expect any huge, this one doesn't swing too wildly. In fact, here, I'll just show you. You can see, where's the rent line? Here we go. So if you go all the way back to 2023, so 224, 222, 224, 218, we started to go down because they were closing some properties and maybe renegotiating some rents. 216, 214, then you can see that 218 we just closed. So even if I took like the last 4 quarters, you can see our average would also be 218. Okay, so that one's kind of not too hard to get to. I think we're probably good there, and that's one of our biggest expenses. That's why I'm letting you know how we get to that, because if that, that's also one of the early videos I did, just saying, hey, we've got some fixed costs in our model. If that number kind of stays the same, but the box office goes up, now you've got revenue going up, but a key expense item not going up. So that's really great, and we start getting more profitable. All right, our other number. So historically, we've been kind of around 54. Q4 was a bit bigger. You can see we were at 66, but Q1 was kind of back in line. So I'm just planning on 55. Like I said, historically, that kind of seems to be around 54. I'm planning on us having other expenses of 55. I'm not going to go too much more into detail on that one. Depreciation and amortization, that's another one where I've got it in line with recent quarters. It's actually been going down for a long time, but my thought is at some point we're going to start to see us depreciating, like say the laser projectors or some of these new seats. I'm going to guess that some of the capital expenditures you're seeing can be depreciated, and maybe we start seeing depreciation and amortization actually go up. I don't know yet. We're going to have to see when that happens. So you can see I've actually got it up a little bit versus Q1 we just finished. Maybe that swings the other way and you could see a couple $1 million more profit here. I'm just showing you because I'm comparing, and when we get to the bottom line, you need to know this. I'm comparing to Q4. Q4, every Q4, we have this goodwill impairment expense. I have done whole videos on goodwill impairment and what that is and why you don't need to worry about it and why it's a non-cash expense, and what the kind of accounting rules are around that. And what you just need to know is every year this has been getting smaller and smaller. It's going to go away at some point. We're not going to have this expense anymore at some point as the industry recovers. And because it's a non-cash expense and it only shows up in Q4, we don't want to compare to that. So you'll see that based on this last Q4, our earnings right there are improved by $70 million just because we don't have that in Q2. So that's just the main thing I want you to know when we compare the bottom line here. All right, so our other expense. This is really hard for me to forecast. This will swing all over the place. You can see Q1, we had almost a $59 million profit here. And I'm only planning on $2 million of profit. There's a lot of quarters where we're kind of in those 50s. The average, the 8-quarter average is basically a $40 million profit in this line. You'll get a lot of things here. Like I think we've maybe put some of our profits from paying off debt at a discount or some other things in this line. I'm not too sure what all is going in this line. I'd have to kind of go real deep on that. But you can see in Q4, we actually had an expense. I'm telling you the 8-quarter average is not an expense. It's a $40 million profit. I'm just plugging a number in here. Wild, wild guess. So what I'm just telling you is you could see us swing 20, 30, 40, maybe even $50 million here. And if that's in our favor, then that is going to be a huge swing in our profits. But I would not necessarily count on that. We've got all kinds of stuff going on between construction and some other stuff. I'm not an accountant. I've told you guys I'm a supply chain expert. And so the accountants in the room can kind of say if I'm sort of speaking of some of the wrong expenses, but where those would go. The point is, I am kind of planning on almost no profit here, and our 8-quarter average is $40 million. So let's wait and see where that is. I just don't like to count on that because there's a lot of things that go into that. But maybe that could be better than what I'm showing you here by a lot. Our borrowing costs. So I am matching Q1. Great to see that was $3 million below Q4. If we have paid off any more debt this quarter by the end, if we see interest rates drop, obviously the Fed held tight. That's been a pretty big bone of contention between this administration and the Fed. So keep watching that. I did see some of the producer price index came in a little bit better in terms of inflation than even expected. In other words, lower. Some price inputs were down a little bit month over month. So let's just keep watch. If rates go down or if we pay off debt, then you're going to be able to take this expense and make it even lower. But I've just said, all right, for now, let's keep it the exact same as last quarter. Also interesting to see that 109 number. Think through Kitty's post in the Time magazine, 109. So that's kind of cool to see. Nothing else is really big enough to talk about other than I'll draw your attention to, actually, I guess maybe I'll draw your attention to two things. So on our investment expense and income, I have told you anytime, take the beginning price in a quarter, take the end price in a quarter from like Hycroft and NCMI. AMC owns stock in both of those. If the stock goes up, you will see profit here, which will be a negative number. It's a negative expense, so meaning we made money. If the stock goes down, you will see expenses here. We report basically the movement of that stock here, and then there's any other number of things that the management team could do that could go here. But mostly you're tracking, I think, Hycroft and NCMI. And you can see I'm telling you, last quarter we actually made almost $6 million on this line. I've got us lower, so it's a wild guess at where will those stocks go over the quarter. How would that make a difference to AMC? Whenever Hycroft really starts pulling metals from the ground and really ramping up its revenue, I imagine Hycroft stock is going to move significantly. That's just a personal point of view. I have not done deep enough DD on Hycroft to do a whole video yet. A lot of people have been asking me to, so I will soon. But just at a gut level, I know that Hycroft is going to become worth more at some future point in time. But guessing when that time is, I'm not ready to put a lot in this quarter. So, if you think that Hycroft or NCMI are going to move a lot more to the upside or the downside, then you need to change this number. All right. So all of those things go into our bottom line. And then the last thing is, you've even said, I'm calling this a wild guess. We're making a lot of profits this quarter. We've never seen a quarter like this. So to guess on our income taxes and the timing of those income taxes, do they show up this quarter? Do they show up next? You're going to see the income tax number become a lot bigger even than what I'm showing you here over time. That number is going to get bigger. And so when that hits and how big it hits, I don't know. So I've just put in a plug of $7 million here. Certainly, I would think maybe we have some downside to my number here, meaning we could have a bigger tax bill. So just know that. All of that then adds up to that $108 million earnings number, right? So for those of you who are still awake, let's pull up and let's make the rest of this video a little more fun, okay? We know that we're tracking probably to like a 2.9-ish billion dollar quarter. Give or take $100 million to either side of that. 2.8 to 3-ish billion dollar quarter. I feel pretty confident telling you that. We know that AMC's attendance had a dip last Q3, but the Q4 and Q1 were far better. Okay. And so what you should be hearing is, based on this box office, based on all of that history I've tracked all the way back to 2018, there's probably a decent amount of upside in some of this forecast. There's some risk items, to some of the forecasts. By the way, something else I didn't even talk about here was foreign exchange. I actually think foreign exchange is in our favor this quarter, versus last year, especially so the euro versus the dollar has moved in AMC's favor since the same period last year. So that actually would maybe increase some of our revenue numbers, which could be really, really good for us. So point is, I actually think there may be upside. I just am not ready to sort of, in past videos, I've said stamp my name to that. But the point is, we're tracking towards maybe $100 million earnings quarter. I can't promise you that. Again, it's just a forecast. But so now let's come back here. I'll give you this broad range, right? I'll say, even make this 80. We're probably tracking on earnings from somewhere from 80 million to $120 million at the bottom line. The best we've ever done is that Barbenheimer quarter of 12 million. So we're tracking at like, I don't know, let's call it 7 to 10 times our best quarter ever at the bottom line, and even bigger cash flows. And I want you to really know that as you think about our stock price and how things have been going and shills showing up. And so just the fact that shorts, they're hosed, guys, and your stock is not representing that value. So now let's finally talk a little bit more. Actually, we're going to come to the stock value itself in a moment here. But, I just talked to you all about Q2 and how I got to the box office number of Q2 and all the movies. So let's go back. These slides are a lot more cool than spreadsheets. You're familiar with all of these movies coming. You've been tracking this. You've been seeing the buzz on the internet. Okay, and all of these movies coming in June. And so what I'm just saying then is, hey, remember, Adam and team have told you the entire last 9 months of the year is positive cash flows. And I would suggest very positive earnings as well. And so here's July, right? So now we just keep rolling forward. Just July alone has 3 movies that are all going to want to challenge to be among the top movies of the entire year. And they're all coming out just in July. And then don't sleep on Smurfs as kind of a family alternative to these big blockbuster movies that are coming out. So July is going to be huge. And so if we look at the total year, I've looked out at every movie through the whole year, and then I have some plug numbers because there's always some movies we don't know are coming. I'll just give you a fun example, like Indiana Jones and the Last Crusade. It's one of my all-time favorites because it came out when I was exactly the right age for a movie like that. That is, going to have a re-release here soon. Well, I hadn't known that was coming, and so there's just some bucket. I forecast for all the movies coming out, and then some bucket of stuff that surprises us. The AMC team has told you on the full year they believe the box office will be 9.5 billion. That was in our earnings call. Adam said that's their internal forecast. He didn't exactly word it that way. What he said is they've always said that we were going to be about a 500 million to 1 billion above last year. And in the earnings call, he said, hey, I think we're tracking closer to that billion above last year. Last year was 8.5. So I'm just telling you, Adam's really saying, hey, they believe we're tracking close to that $9.5 billion number. I'm telling you that I believe we're tracking to a 9.7. So we're kind of in the same zone with each other. And if you look, this was actually before the year even began. I had a 9.7 number then, and this was from Box Office Pro. I just sort of had Googled, and the AI search results showed me a panel of industry experts anticipates a domestic box office between 9.3 and 9.7, right? So at the beginning of the year, Box Office Pro said 9.3 to 9.7. More recently, AMC said 9.5. I'm still saying 9.7. So I'm just grounding you in, we're definitely over 9 billion is what we all believe. And you could just believe that we're somewhere between that sort of 9 and 9.7 number. And if a few movies really blow it out, maybe we even start sniffing that $10 billion number. Boy, wouldn't that be fun to be talking about, right? So, all right. So if you know now, I'm telling you my full year. I just showed you a lot of detail on how Q2 rolled up. We're not going to do that level of detail. Don't worry, I'm not going to put you back to sleep the rest of this video. So I'm telling you full year, add in Q3, add in Q4. We obviously get Avatar and Zootopia 2 and Wicked 2 in Q4. We get some huge movies, a lot of other things coming. We'll do those quarters another day. You can take a lot of confidence. We're probably between 9.3 and I don't know, maybe 9.8 or something like that, right? So based on that, here's just a view of what that kind of means. And then I'm going to talk about how that would impact the value of our stock. The final 9 months of the year, I'm telling you, is an $8.3 billion box office. The entire year of 2024 was about 8.5. So that's how big these three quarters are. These three quarters are as big as the four that came before them. Well, the four of 2024. That's really big, and that's 20% growth on that same period the year before. And on the full year, I'm projecting 14% growth at the box office over last year. Now, remember that in that time, AMC has expanded popcorn and expanded merch. And so, depending on how you feel about the ways that I'm forecasting those businesses, I'm telling you that AMC's revenue for the 9 months is growing 25% over last year, so outpacing the box office growth. Or for the full year, we're growing 18%, again, outpacing box office growth. And then AMC's earnings, I'm telling you, these final 9 months are over $200 million positive earnings at the bottom line, even with, I still have a number for impairment in Q4. Like I said, I have that shrinking year over year, but it has been shrinking every year the past, I don't know, 3 years or something. Even with some impairment still this year, and I don't know when the team gets to stop doing that. I have a feeling it's probably closing out some of the properties that we had sold off, and until we're done recognizing all that, we'll just trickle that out over a couple of years. But anyway, the point is, these last 9 months, we have some huge amount of profits. Even if I'm wildly, wildly wrong, I'm just saying these last 9 months are positive earnings at the bottom line. I believe that pretty strongly at this point. And you can see that's a $400 million improvement year over year. And guess what? Our stock and our overall market cap, even if you want to kind of account for dilution, is lower. We're lower now than some of these same periods last year, even though we're going to improve just in 9 months. We're going to improve $400 million of bottom line earnings, not to say anything of our cash flows, right? And on the full year, right now, look at this asterisk, okay? Please pay attention to the asterisk. And all caps, I'm pretty much shouting this. There are going to be many, many swings to these forecasts. We're going to have upside, we're going to have downside, we're going to learn together, through the rest of the year. This is just a current point in time view. So you cannot hold me to these numbers, but I'm telling you, as it stands now, until I learn some new things, this is what I kind of am tracking. And I'm tracking full year positive earnings. Now, I just have a feeling I probably should find some places for downside and maybe, I don't know, even make this forecast overall for the year a little more conservative. But it's in the conversation. That's all I'm saying. I'm not saying lock it in, this is my forecast, but I'm saying it's in the conversation that we have a shot, depending on how all the movies break, at full year positive earnings. I think that's a big, big deal, and there's no way that is priced into your stock. So speaking of which, why don't we take a look, and I should have maybe done some animation here because you're just going to jump ahead. But we've talked about price to earnings, right? So price to earnings is a trailing 12-month metric. It looks back a year, and it says, all right, for your last year of earnings, what would your stock price be if I priced in a certain amount of years of that earnings? And you can just go look at any stock all over the place. I think I've told you the historic kind of 100-year average for the S&P 500 is around 19 years. And so, recently the stock market was way more bullish, and we got to some all-time highs, I think, for the S&P in terms of how many years of earnings were priced in. Then you started to see inflation, and you started to see rates change, and the whole stock market kind of repriced itself. And now price to earnings came down. And so a lot of this has to do with the time value of money and growth expectations of a company and all kinds of things. We'd have to do a whole video on that. But most of you are probably familiar with PE ratios, the price to earnings ratio. Very, very standard metric. And what you could go do is look at Cinemark. Why don't I even pull this up on my phone? Just a minute, guys. I'm going to pull up Cinemark's current price to earnings. And as I do, I'm noticing that AMC closed at 281 today. So maybe we're finally getting a little bit unlocked. Love to see that. Cinemark's current price to earnings, it's lower than it had been recently. It's at 21, but for quite a while it was tracking at around 30. when a company is growing, you will see that price to earnings be significantly higher. Now, I want you, as I go through these, to also be thinking about anything you believe about a squeeze, anything you believe about shorts covering, swaps, tokens, whatever you want. Even just plain Jane, let's say you don't believe me about all the swaps and the tokens and the naked shorting, and you just think it's just do the math on the plain old shorts. At some point, as AMC becomes a highly profitable company, you the thesis would be that shorts will not want to keep their position, especially the shorts who start being more and more underwater, right? They're going to want to turn around. Some will pocket profits. Some shorts are in profit. Although, the people who've shorted at these all-time lows, I don't even know what they're thinking. Um, and some will just have to stomach a loss. But the point is they won't want to be in it as the stock is rising, right? So if you think about buy low, sell high for us longs, for the shorts, it's the opposite. They want to sell at the lowest price possible or close their short position, really buy. They're trying to sell high, buy low. Okay, so what I'm just telling you, based on, now think about all the detail I showed you of how I get to a forecast. And honestly, I still only showed you scratching the surface on how much homework I do and the level of thinking I do on every line item in all of our, what's called our P&L, our income statement. All of our income and expenses, all the movies coming. I have looked at the movies so far that have been announced for 2026. And I think I know I've told you that multiple industry voices are asking whether 2026 could be an all-time record at the box office. You start getting Avengers back, you start getting some Star Wars content back. We'll lead off Q1 with the legs from like Avatar and SpongeBob and maybe a couple others that are Anaconda is going to be a fun movie that comes out late in the year. There'll be some legs from Q4 movies that fill in Q1, and then there's some big Q1 movies, and then we're just rolling. Like I said, we got Mando, we got Avengers, got a lot of really, really big movies in 2026. Take a look sometime. I've told you that movieinsiders.com is a nice website, and you can filter down to like theatrical releases and the year and take a look at what movies are coming and all of that. So what I'm telling you is I can forecast, obviously I'm going to be somewhat wrong this far out, but with some degree of confidence, I can tell you that 2026 is even better than 2025. Adam has said the same. And then I'm just believing, and a lot of actually movies have already been announced in 2027 as well. And so I'm believing that gets even bigger still. We get the next Kong and Sonic, and so there's some big movies like that have already been announced for 2027. I don't know. So we get another Avengers. The point is, box office is clearly growing. That's why I've called it a multi-year turnaround in this industry. Then I can make some assumptions on AMC continues to pay down debt. AMC starts seeing some return on all the premium screens Adam has said we're adding, all the premium seating we're adding. So if we start having lower debt payments, more premium seating, and a bigger box office and expanding popcorn, you guys hear how AMC is actually becoming more profitable and the industry is growing. There's this multiplier effect. So let's say on very high level napkin math, you cannot bank on these prices at all, but I'm just telling you, based on some very standard price to earnings metrics, here is what AMC's stock price would maybe be valued at, if you believe that I've got any skill in forecasting what our earnings are going to be. And then the other thing is I'm starting out at a farther out place so we can look backwards at some actual earnings. So Q1 of 2026, when we finish it, and report that in May of 2026. In August. No, in May. Okay, yeah. We just finished May, right? We had our earnings call in May. Sorry, we finished Q1. We had our earnings call in May. And so same thing. So in May, a year from now, when we report our Q1 earnings, and then we combine with all of these great quarters in 2025 that I'm telling you about, and if you look back 12 months, then, we are going to be turning around so rapidly that I would suggest you might even see price to earnings ratios even higher than this. What if I plugged in 35 or 40? So you'll have to pick your own number of how this looks, and you could kind of do some math on that. But basically, AMC would be worth something between $13 and $20, depending on how many years you want to price in of our earnings. And of course, again, How accurate am I on our earnings forecast? I could be way wrong. You cannot bank on these numbers. But you get the idea. We're going to be something far higher than we are now. And then you'd see how it just steadily keeps climbing as the box office is climbing, as AMC's debt is being paid down, as the popcorn is rolled out, et cetera, et cetera. Um, then like say when earnings are reported next August for Q2, we ought to be worth maybe as much as $25 just on a price to earnings ratio. And you can see by the end of 2027, that's reported in what, like March of 2028? So obviously that's a long time from now, but maybe we're worth even like $75. I cannot even come close to promising you these numbers. There's no trust me bros here. I'm just telling you based on one guy's possible earnings forecast and possible PE ratios. The point is, we're worth way, 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 way more than we are now, as long as you believe all that's going to happen. So you need to think through all the details I've shown you in this long video with all these numbers. And why does that all matter to me? Well, the first is, as long as all this happens, there's no such thing as a guarantee in stocks, but I'm practically guaranteed massive, massive returns against today's stock price. I just said we closed at $2.81 today. Okay, so that's one. I know that this stock is not priced based on any kind of forward view, is what I'm really telling you. As the box office is clearly recovering and going to have a multi-year run of getting far, far bigger. I mean, what do you think Shrek 5 and Toy Story 5 are going to do, right? As that is happening, as James Gunn gets the DC universe rolling, as Bob Iger has signaled clearly Disney is investing obviously in Marvel, really clicking on all cylinders. As we get Star Wars, all these family films that are rolling out, it's just so painfully obvious that the stock price today has nothing to do with where this industry is going and where AMC's leadership team has positioned AMC. And I want you to know that for two really big reasons. One is, of course, I think there is a war of attrition, some have called it. We've talked about that for, well, it's been years. That's why. These guys want you to believe that AMC's stock price is just completely frozen and there's nothing that's ever going to be done. And oh, woe is me, and you should give up. And there's, the big bad wolf is going to beat us and whatever. And so they want you bored and they want you frustrated and they want you giving up. And of course, that's never going to work on apes. But our job is not to convince ourselves. We're sort of, preaching to the choir is a saying. Our job is to help the world see what's going on with AMC. So I would just even challenge my followers, get out of the negative speak and get into the positive. And you can be positive without overhyping. You can be positive without any hype. This isn't hype, I'm telling you. I'm showing you what the industry is doing. Based on numbers. I mean, if you get hyped by a spreadsheet, then you're as nerdy as I am, but most people go to sleep on a spreadsheet. So I'm not hyping you. I'm just showing you numbers. And that's very, very positive, right? So that's one, is just defeating this narrative of somehow we're just always going to be stuck and frozen. That's not our future, right? And so if you can get in on a stock that isn't priced based on its future, there's a lot of value to be found on that. So that's one. The other is, I will not be surprised if there's a time and a place in our future. I don't know when, could be a long, long time down the road, but where really big players start seeing the value that I'm talking about and they want a piece of this. And so, what would happen if someone came with an offer for the whole company, right? We've talked about this before. And I would want you as a voting shareholder to understand if someone ever gives an offer, all I have to do is sit and wait, and I'm going to be somewhere way, way above. And again, this is without any squeeze considerations. Add a squeeze on top of this. If shorts start having to cover, if swaps start kicking in, if tokens, start getting covered, et cetera, et cetera. So we're going to have conversations if it ever comes to that. And I don't mean to speculate too heavily here, because it is just speculation. There's no actual rumors out there. There's nothing solid that says we're going to get some offer. But if that was ever to happen, we're going to need to talk about what seems fair, because we all still, many of us still believe in a squeeze. I believe in a squeeze still. Many of us, or maybe all of us, certainly if you're long in AMC, you believe that it's deeply undervalued. So we're not going to want to accept some insulting offering. Like, say someone came and said, I'll give you $10 a share. I'm going to be like, honestly, take a hike, because all I have to do is wait for like a year and it's going to be triple that, um, just on fair valuation, right? So I think it's important for us to start understanding that we are in a very different world than we've been in. For us to start having some forward price, even if you disagree with all my numbers, think about what you believe is the forecast for the box office, what you believe is the forecast for AMC's revenues and earnings, and then start doing math on what that means to the value of the shares. And we're not reflecting that value right now, not even close, right? And let me just really reiterate that I still believe in a squeeze for AMC. I really, really do. There's, why in the world are all of these, you know, short and distort tactics still being used against us? I believe that they are stuck and they are scared. All right, so let's pull up. Maybe you've seen the Superman trailer and it says, hey, buddy, eyes up here. So eyes up, let's pull up. It's not the exact numbers that I've shared with you that matter. It's the direction and the general concept. I can be completely wrong about these numbers. You can disagree with these numbers. You can say I should have been way more bullish. You can say I've overhyped. But the point is, whatever you believe, you cannot argue that this industry is under a radical turnaround, that AMC is positioned to make profits on that turnaround, and we are deeply, deeply undervalued based on an industry and a company turnaround. Directionally, that's just honestly not even up for debate. It's so obvious. The box office is in a multi-year recovery. AMC survived and now is thriving, right? Survive, then thrive. So I'm just playing on those. We're there. We're in the thrive. I'm telling you, we probably will make at least $80 million at the bottom line this quarter. And maybe, I honestly believe we're probably going to make over 100. I just don't know if there's some expenses the team is tracking that I have been unable to forecast. So I want to be careful not to overhype you on that. AMC is on the offense. We're investing in the Go plan. There's continued debt pay down. I think we're now, I'm going to make this number up, so it's already wrong when I say it, but we're now at like 14 out of 16 quarters where we've paid down debt. We have lower debt by almost $1 billion than in 2019. This is becoming a very, very healthy company. You know, any speculation you want to make on the future about Hycroft and NCMI and the expansion of popcorn, and popcorn going wide distribution, like, we're going to make a lot of money on some of those things. And what about other distribution? You know, the team has gone quiet, so I'm going to assume that we're not seeing a lot of traction on AMC distributing content. But, you know, I don't necessarily think it has to be dead either. At one point, Adam said his phone was ringing off the hook. Taylor Swift made a lot of money, and I believe Beyonce made plenty of money as well. It's just Taylor's obviously in her own stratosphere right now compared to any entertainer. But there's a lot of big stuff still coming. And so who knows if maybe you want to speculate, and I will put that in the bucket of speculation, but will AMC ever be distributing content as well? So there is just a lot to like in the future of this company. And so other future discussions we'll have. This is it, guys. We're rounding out. We will talk squeeze updates. The short interest is very, very high. The days to cover is very, very high. I have not been tracking the cost to borrow, but I imagine that's going to be going up. You guys know that right now AMC does not really even have shares to dilute, and Adam has not yet asked for more shares. AMC only probably has a little over 1 million shares unspoken for. That is very squeezy. Now, I am not on this video committing to a point of view about whether there'll be future dilution. Yeah, I get the trolls every single video, every single post, pretty much. You know, trying to fear you, like FUD you, spread fear into there maybe being future dilution, all of that, whatever. I'm honestly just unconcerned and unfazed by that conversation because of how profitable AMC is becoming. And so there will be a point in time where there's probably some healthy dilution. For instance, what does it look like if we go the GameStop route and we're suddenly completely debt free? So, absolutely, when the time is right, Adam will come talk to us about that. But right now, that's very squeezy that AMC does not have shares to dilute with for the most part. Um, we're going to have other future conversations around big industry news. There's been a lot of stuff in the industry, AMC news. There's a lot of things worth talking about. I will kind of come back around to talking about Bitcoin and the relationship between Bitcoin and GameStop, and a lot of things I'm very bullish about on both of those. And as always, we will win. So let's go.